I'll just run through the slides, and then I think that's about it.
Okay.
Just screen आ गई है आपके सामने. Can you guys see the shared screen? Tavnak, can you confirm if you can see the screen?
Yes, it's visible.
ठीक.
Kamal, Ahmad, are you guys here? I cannot hear you.
Hello, can you hear me?
वालेकुम
Gigi,
सलाम.
now I can.
I can see your screen.
ठीक है. So I'll run through this. Ahmed, if you have any questions in between, feel free to jump in. Otherwise, we'll just wrap this up relatively shortly.
Okay, ठीक है. आप मैं लिख लूँगा साइड पे, आप कंप्लीट कर दें, उसके बाद I'll ask questions.
चलो सही, ठीक है. So today we're going to cover an understanding of the capital and financing needs for startups. So to start with, the big question of why should this matter? The answer is, according to the US Chamber of Commerce, 82% of small businesses fail due to cash flow mismanagement. So this is by far the biggest reason for why startups fail. What that means for anyone who's setting up a business, building out a business, is focus on cash flow has to be one of the top priorities that management does. Now, why should startups care about finance? To begin with, as I said, it's the biggest reason for failure. So you're mitigating your risk. Effectively, if you're accessing external capital, looking for external capital, then it helps reduce that risk of failure. It reduces the pressure and individual personal risk. It helps spread the risk as well across a wider base of shareholders. In some cases, those shareholders may be more financially stronger than the entrepreneur himself. Also expands potential. So if you're relying solely on your personal funds, then naturally there's only so much you will be able to do in terms of growth. Whereas when you open up the doors to external funding, there's a lot more opportunities that open up as well. Having access to better capital can also help you improve profitability by optimizing business processes, by optimizing the opportunities that's available, and effectively bringing better longer-term success. And last but not least, it obviously accelerates execution, whether it's in terms of having a larger team, or whether it's having a better sales team in place. You can naturally, if you have more capital in hand, there's so many more opportunities to be able to do the business better that you're looking to do anyway. Now, a quick view of how startup funding works. So at the very beginning, you're on the idea stage. You guys would have seen, I'm sure you would have seen many times the small places, the small rooms, in some cases the car garages where some of the biggest companies have started off, and it's almost urban legend where they'll show you a car garage for where Apple was started or Microsoft was started and so on. Then you have you move from there to actually setting up the company quite often by engaging some sort of co-founder. Obviously, you can go alone if you want as well, but more often than not, having a co-founder helps quite a bit. It splits the burden, everything from the non-financial to the financial. Now, once the business is at a stage where it's got some reality to it, either there's some sort of form to it, then the first and foremost the funding source of funding that you will tap or you should tap is your family and friends. Now, the thing is, if you have gone outside to raise money, one of the first things that any external investor, especially an experienced investor, will look at is how much money did you put in to begin with? And then did people close to you who know you better than anyone else put any money in? So for example, if you go in and say, I put in $50,000 from my pocket, now I'm looking for example, $300,000, but you basically didn't go to your friends and family, it is a potential flag in that they might think that why wouldn't you go, if you really think this is such a good idea, why wouldn't you go to the people closest to you, and why aren't the people closest to you buying into your idea? So that's the question that you will possibly quite likely get if you go directly to a more institutionalized investor. Then there's the seed round. Seed round can be actually there should be somewhere in between the family and friends round and seed round and angel round. Angel round is more often done by individuals who are financially well off, looking to diversify into higher risk, higher return investments, and startups are definitely in that space. So that would be somewhere in between these two. Once that is done, you head into seed round. Seed round can be done via institutions as well. So there are some seed level VCs that come in. And now once that's been done, once you've got a seed round in, once your foot is firmly on the ground, you've got some clients in place, potentially some revenue coming through potentially, that's when you start going into tapping into proper VCs. Of course, it's possible that in some cases you'll find ideas that are extremely hard. Let's say you've done something in AI, even if you don't really have any revenue, you might be able to go and tap into VC money. But more often than not, VC will look at more metrics than what your seed round investors, what your angel investors, and what your friends and family certainly would look at. So from here starts off a whole series of investments, series A, B, C. These are often benchmarked against what level of revenue you're at. So there's like broad understandings of what a Series A would entail in terms of revenue, what a Series B would entail, and so on. And then if you go really well, one of the more often than not, one of the key graduating goals for companies is an IPO. Not all companies do IPOs, and there are some extremely large, fully privately owned companies still worth tens of billions, if not hundreds of billions. But an IPO is a natural way of institutionalizing the company, more and more so trying to ensure its continuity after the founder passes away, even if the family is not capable enough or is not interested enough to continue the business, then you can potentially have professional management. It is much easier to hire professional management when you are a listed company versus when you are a private company naturally. So this would give you, they're giving you some references here on the left side on the scale in terms of size, but these are very generic references that you can think of. But broadly speaking, yes, if you're looking at tens of thousands of dollars that you're raising or sub let's say $100,000, then by that at that stage probably the friends and family round is where it still comes into play. Let's say a couple of $100,000 or so would be somewhere in the angels round, and then from there on you move into the seeds in the fall. Now in terms of splitting the pie, what does that mean? And I think this is quite an important slide to understand, and I think the best way to understand it is first think about if you are starting off a company, and this would be true for many entrepreneurs, especially first-time entrepreneurs, they would want to be retaining as much of the company as possible. So what you see on the screen on the left-hand side is 100%, right? Now, to understand the benefits of dilution, because for some people, dilutions are anathema. So look at what Bill Gates owns of Microsoft. Look at what Warren Buffett owns of Berkshire Hathaway. Look at any big founder, any big sizable CEO, who's built the companies from ground up. Look at the ownership you have today when it's listed, and you may be surprised to find out that it goes into, well, it's showing double digits here, but in some cases it will go even into low single digits, depending on how big the companies become. So dilution on its own is not a problem. What you need to do is you need to make sure that every dilution that's happening is bringing overall value to the company. So in this, taking the example from the slide, you started off as a sole entrepreneur. Let's say it's the first time you're trying out a business. If you go out and get a co-founder who actually has more experience of running companies, then suddenly there's a lot more value on the table. And then you're moving into your friends and family round where it shows your uncle and so on. Now, at this stage, when you hire people, naturally, you wouldn't be able to pay them a tremendous amount of money, So one of the key important things that has to come in is an option pool, because it is these option pools which retain people a lot more. I am not sure if you guys have seen it, but recently there was this news article saying that there's an enormous amount of multi-millionaires. When I say multi-millionaires, $20 million and above in Nvidia now. Obviously, that's an exception. That's a huge exception, of course. But when you've got early stage employees coming in, those are also very high risk takers, relatively speaking, as far as people who are in jobs are concerned. And they want to be compensated for it. And the way to get compensated for it is truly in the form of equity, because then they will take benefit from that. So from here on, you've got this now shows angel investors, which I was talking about before. So angel investors here is defining as $1 million, or has $1 million, or 200 earns $200,000 annually. This is what the definition is of what they call an accredited investor. An accredited investor is essentially someone who has a base minimum amount of money on which the regulator feels that they can make the right decisions to invest in high risk investments like startups. Then you move into, once you've done that, you start institutionalizing your company a little bit, and then you move on to venture capitalists. Venture capitalists start investing money in the hundreds of thousands of dollars. It can be, it says here in the sheet starting at 500,000, but I've seen examples where venture capitalists have put in $100,000, or even or not less, but I'd say $100,000 and above. Of course, they would prefer to put in larger amounts, because if they have a larger amount of capital that they're deploying, then if they have to deploy $100,000 and so on, then it's going to take them a lot longer to deploy it. We've got early employees, which again comes back to that what I was mentioning about having an option pool, having giving them a buy-in to the potential equity uplift. From there on, you start keep building your company. Your VC comes in, then you've got multiple VCs that come in, and then it's talking about moving into IPOs, which naturally is where the company is an enormous company by that time. I would say over here, the kind of dilution they've shown from the first to the last is a bit uh, conservative. I don't know if I want to call it generous or conservative, meaning that especially if you're getting listed, the likelihood that the founders will retain 33 odd percent of the company, sorry, 35 odd percent of the company is quite low. Because normally when you're listed, it's going to be a much larger company. So it's possible that you might be lower than that. But nonetheless, the idea being that dilution is not something that you should be afraid of. Taking on partners, giving out equity can have an enormous amount of value. It can get you the kind of employees that you would not be able to pay for otherwise. It can get you the kind of resource that you would not be able to pay for otherwise. And so you shouldn't be afraid of doing dilutions in equity. But at the same time, it shouldn't be done without thinking about it, of course. So the big question then becomes, if you kind of understood the idea and you're open to the idea of dilution, the big question becomes, how do you minimize your dilution? So while I've said to you in the previous slide or two that you should be willing to dilute yourself and take on partners and take on equity option pools for employees, you also don't want to be giving out too much equity, especially early on, because that's where the biggest amount of value creation is going to happen. So what you need to do is you need to figure out at every point in time when you're going to head out to the market, how much do you need? Now, what factors come into that? First and foremost, what stage of business you're at. And from there, you need to figure out how much is the minimum amount, especially early days. You want to try and raise the minimum amount of money in early days, create the maximum amount of value on the back of that money, and then try to see if you can uplift your valuation before you go for the next round. Now, what were the key things that are going to come through? There's operational expenses, naturally, like rent, salaries, etc., etc. There's development costs. So if you're developing a product, especially, then I know that the TSD has a services focus. Nonetheless, there are some companies with the development focus as well. So if you've got a development focus, then you need to factor in how much money is going to be needed for development cost. That very much is the equivalent of what you may have heard in normal parlance called capital expenditure. So this would be quite similar to that. Customer acquisition becomes, once you've got a product, somewhat of a product at least in place, customer acquisition becomes an important element next. This could be anything from internal sales teams to external events to external sales pushes and sales teams, whatever the case may be. You've got team expansion coming through, front end, back end. And then once you have all these factored in and figured out in terms of how much money you need, you basically calculate what your runway is. So I'll give you a simple example. If, for example, you go out, let's say you've got a great idea in mind. You go out, you raise money from your family and friends, and you basically set up, let's say, an MVP. Using that, you basically go to angel investors and you raise a couple of $100,000 to make it from a very base MVP to a more functional product. You still may not be in a position to generate revenue. You take that to a VC, which convince them that not only is the product a good idea, but that you're the right person to lead that company into deploying that product across the market. Let's say you raise $300,000-$400,000, then you start turning that product into, or that service into a money making opportunity, right? Now, let's say because you've got grand ambitions, and this would be less so a problem for services companies, more so for product companies. If you've got a grand ambition in terms of growing aggressively, then it's possible that you're going to hire a big team. You're going to hire some key resources that may not be translating into incoming money immediately. But what you want to do is you want to utilize them. So let's say you get enough money for the next 6 months. 4 months out, you'll be again on the road looking for money, which is not a bad thing. Then by that fourth month, there should be enough progress in the business that whoever you're going to next gets convinced that yes, I'm more than happy to give you money for another 6 months or another 1 year worth of runway. So you keep taking money and building out your runway. Again, services companies do tend to be faster in terms of turning cash flow positive, which is why it's possible that you may need to raise money only once or twice, which is fine as well. But until you know what your expenses are going to be and you have a reasonable estimate of when your revenue and cash flow is going to come in, you do need to make sure that you're not going to run out of runway. And you need to head back to the market to raise money, let's say 2 to 3 months before you're going to actually run out of money again. Because if you wait till the last month, then you might either not be able to raise the subsequent amount, or if you do raise it, it's possible that your terms would be not as good as what they should have been if you're raising them in good time. So there's a funny parlance there's a funny phrase in finance. They say the best time to borrow is when you don't need money, or the same thing, the best time to raise money is when you don't need money, because then you can negotiate. So again, assuming you bought into the idea that dilution is not necessarily an evil thing, you've figured out that what's your requirement, how much money do you need to maintain a 6 months to a 1 year runway. The question becomes on what are the ways for you to fund your venture. It can be anything from crowdfunding. There are many platforms as well. But the problem with crowdfunding is, keep in mind, unless you're convinced that, and unless you have good reason to believe that you're just going to crowdfund once and or raise money once and you're never going to have the need to raise money again, crowdfunding, unfortunately, is not looked upon very favorably by subsequent institutional investors. So if a company's raised money via crowdfunding platforms and has a whole bunch of investors, small investors, yes, you would have gotten the money possibly at good terms, but then institutional investors won't really be very happy with you the next time around. Grants, of course, the best thing you can get. Depending on where you're working, what segment you're working in, grants are by definition free of cost, coming from the government. VC comes into play when you're at least some size. Let's say $1 million in revenues, at least, would be when international VCs will start looking at you more closely. Of course, there are smaller seed investors that can look at you at lower levels as well. Pre-sale could be a great way. Like effectively, if you can start. I'll give you a very simple example. So I know somebody in the US who's very well connected in the in the S&P 500 space. So what he does is he goes and buys land or effectively reserves land, goes and effectively gets pre-rental agreements in place with some of the largest S&P 500 companies. And then on the back of those agreements, is able to go and borrow money. So effectively, he constructs on the basis of money that he's borrowed because of uh, pre-rental agreements that he's gotten with some of the strongest names out there. So pre-sale, some sort of ability to collect money before you actually start necessarily handing over the product is obviously great. Startup competitions are another way. They're both ways of attracting attention and in some cases actually winning money as well or winning grants as well. Angel investors we've covered already, which would be more wealthier individuals that you're talking about. Bootstrapping, of course, is keeping your belt as tight as possible for as long as possible. But you can cut costs only so much because there will come a point where, like, if you don't have revenue and if you don't have external funding, then you can't really keep cutting costs because if you cut costs down to zero, basically your business is shut down. And last but not least, loans. Although I think for earlier stage companies, this will not really be a great a way to look at it, great way to access money. There are some VC lenders that come into play as well. So VC lenders tend to charge quite a bit and often often take out debt which will turn into equity. So it is a potential option, but nonetheless, it's not, especially for an early stage company, it's not ideally the first option they look at. So I'll wrap this up by telling you what we offer. So TST Capital essentially can help you across three broad categories. We're talking about financial management, so whether that's funds management, this can be on an individual level, this can be, but we're not really managing assets. I think the correct nomenclature would be this is more guidance, more counseling and more advisory on funds, on asset management. So effectively, if you have assets that you're not sure how to deploy, we can help you figure the process out. But it would be more advisory rather than us taking on the money. Fractional CFO roles, these can work really well for startup companies, early stage companies. Effectively, everything from the basics such as bookkeeping all the way to having somebody to bounce ideas off at the higher level. Think of it as a board position equivalent, is something that we offer as well. We can help you with audit, budget monitoring, actually budget formation is probably what should be here, and then budget monitoring, and of course bookkeeping. When you're ready, you're in a position to want and ready to go out to more formal investors, VCs, helping you through the process of getting ready for facing those investors, having the right collateral in place, is something that we can help you out with. Helping you connect with potential investors is another one that we're looking at. Of course, TST itself has a fund which effectively TST Capital is responsible for deploying across startups. So that's something that could be looked at as well. Last but not least, we're also providing, think of it as the equivalent of management consultancy services. So whether that's trying to figure out which markets you should be focusing on, which segments within your own markets you should be focusing on, how should you be thinking about growth, how should you be thinking about financial discipline, all these we can help you out with. So if any of those make sense to you, feel free to reach out. Thank you. Sanjay Ahmed, कोई है question?
I'm just trying to figure out if I can stage people this time.
Let's go back and try to figure it out. आपका जो है, so let's go from here. Right, let me just share the screen again. Okay. So first off, which business are we talking about? I think you've got two, right? One is the services one you've been doing for a while, I think, if I'm not wrong.
Yes.
and there's a
Yes.
product one that you're building out, right? Like there's two, if I'm not wrong, that you're talking about. So which one are you talking about?
I'm talking about both because I will take them parallel and both are related to services and
Okay.
market,
So then the
market
question
services.
becomes, देखो दोनों my understanding, and I could be flawed understanding, so help me out with it. My understanding is that your services one, you have a lot better cash flows, client base, et cetera, set up over there, right?
Exactly.
So the question is, what are your ambitions, and what do you need to get to those ambitions?
My ambition is basically to make it a platform and a business which can grow different cities, especially initially in Pakistan. And that platform will offer different kind of services and not only services. Basically, it's a platform where we can accommodate and facilitate all the startups. Uh, all kind of professionals can include into that, like lawyers, chartered accountants, HR, marketing team, sales. That will be a platform. Uh, we can provide them with a space where all their problems will be catered, and we under one roof we can provide them with all the solutions.
Okay. So then the question becomes, what do you need? What are you missing right now to get to that level?
Well, for the first month we are at break even. Hopefully, inshallah. By the end of this month, I'll check my books. उसके अंदर अभी तक हम लोग ब्रेक इवन के ऊपर आगे भी हैं जो हमारी कॉस्ट थी और जो हम लोग की रेवेन्यू आया इस महीने का वो हम लोग ब्रेक इवन पे होंगे कोई लॉस वगैरह नहीं है इसको मैंने एक्सपेंशन में लेके जाना है मजीद लोगों को प्लेटफॉर्म पे मैंने इनवाइट करना है उसके लिए कुछ प्लानिंग कर रहे हैं चीजें सीधी कर रही हैं जो चीजें मिसिंग थी थोड़ा सा इंटीरियर के ऊपर थोड़ा सा वर्किंग कर रही हैं थोड़ा सा लेआउट चेंज कर रही हैं कुछ ब्रांडिंग के ऊपर वर्किंग कर रहे हैं मार्केटिंग प्लान बना रहे हैं उसके लिए
ठीक
तो
है.
ये चीजें एक दफा
So
होती हैं तो उसके
you're probably somewhere between a family and friends and seed round, I would imagine. I mean, depending,
exactly
that's
yes
just somewhere in
that.
there. So you
Yes.
maybe the angel round is where more you kind of fit in some ways. It could be there are seed VCs, early very early stage VCs as well, but you could be an angel. So you're basically beyond the friends and family round from the looks of it. But whether you're beyond the angel round is a question which can be answered when we look at it a bit closer on your business.
Yes. तो सेकेंडली इसके अलावा इसी को एक्सपेंशन में ये है कि मैन पावर सर्विसेज प्रोवाइडेड टू डिफरेंट कंपनीज बिजनेस से ही रिलेटेड है आई हैव टू ट्रेन माय टीम और डिफरेंट क्लाइंट्स को एंटरटेन करने के लिए उनको साथ हम ऑन बोर्ड ले सकते हैं और इसके ऊपर खैर वर्किंग चल रही है वंस दैट विल बी सेटल अप सारी चीजें सही हो जाती है तो उसके बाद फिर दूसरे उसको प्लान को साथ ले सकते हैं
ठीक है. आपकी आवाज थोड़ी सी कटनी शुरू हो रही थी. आप थोड़ा सा आप यहाँ करीब हो जाओ माइक के. आपकी थोड़ी आवाज थोड़ी सी कम आई थी.
अब ठीक है आवाज
हाँ, बेहतर है पहले से.
ओके तो ये एक दफा कोवर्किंग और ये प्लेटफॉर्म हम लोग स्टार्ट कर लेते हैं तो उसके बाद जो बाकी साथ वेंचर जो दूसरे सर्विसेज वाले वेंचर बनाए भी हैं वो भी साथ हम लोग उसको लेके चलेंगे उसके ऊपर भी प्लानिंग चल रही है साथ साथ सर्विसेज क्या क्या ऑफर करनी है हाउ वी कैन इम्प्रूव और गिव मोर अट्रैक्शन टू द कस्टमर्स और उनको एक प्लेटफॉर्म बनाने के लिए हम यूएसपी अपने क्या क्या उसमें एनहांस कर सकते हैं
ठीक है. ठीक है. I mean, बात यह है कि अपने जब भी पैसे रेज करने होंगे, even to an angel, you have to give them a business plan. The business plan has to cover everything from uh, starting on the financial side. Obviously, first the narrative of why this business makes sense, why you make sense. फिर उसके बाद financial projections. What is it likely to, like, if it goes well? What are we looking at? What is the size going to be? Right. So for that, you need to have financial projections in place as well. And then obviously so to start with, your ability to demonstrate that you can deliver the narrative of why this makes sense. If this goes as planned, what does it achieve? What does it mean for the investor effectively in terms of returns? And then just the roadmap, of course.
Okay, fine. इस पर कुछ चीजों के मैं वर्किंग की हुई है. My initial target is like within the next 6 months I should अपनी 90% कैपेसिटी को मैं अगर अचीव करता हूँ तो then I'll start planning for the expansion.
ठीक है.
बहुत सी चीजों को टेस्ट एंड ट्राई भी करेंगे, कुछ चीजें हम लोग नई इंट्रोड्यूस करेंगे, कुछ चीजों को हम लोग वाइंड अप करेंगे जिनका पॉजिटिव फीडबैक नहीं आ रहा है या जिनका फायदा नहीं हो रहा, और उसके अकॉर्डिंगली फिर एक्सपेंशन को प्लान करके तो उसके लिए फिर मैं वर्किंग करूंगा सारी. कुछ वर्किंग मैंने की भी थी एक, मतलब अभी तो प्लान ये है कि मैं इसको एक्सपैंड करूं 200 सीट्स के ऊपर, पहले मॉडल को 90% रन करके. once I'll be able to run it for at least 6 months, 90% कैपेसिटी के ऊपर, उसके बाद फिर मैं आगे फर्दर एक्सपेंशन के लिए.
ठीक है.
I have a question. Hello.
हाँ जी. हेलो.
Hello.
हाँ जी.
जी असजद, मेरा एक क्वेश्चन है जो अभी इससे पहले वाला जो आपने चार्ट खोला हुआ था उस पे आइएगा, जो स्टेजेस पे,
स्टेजेस पे
जिसमें आइडिया स्टेज था,
ये
then
वाला.
move towards
जी.
co-founder. ठीक है, let's suppose I'm on the idea stage, I'm plan to move towards co-founding stage. So definitely जो बात हुई VC की, venture capital, someone is going to fund you, definitely वो उसमें equity भी रखेंगे अपनी, और कंट्रोल भी फिर उसी तरह से, जिस तरह इक्विटी डिवाइड होगी उसी तरह कंट्रोल भी डिवाइड होगा. सो द क्वेश्चन इज कि जैसे जैसे आप ग्रो करते जाओगे आपका प्रॉफिट आएगा, आप उसको दोबारा री इन्वेस्ट करोगे. सो इक्विटी को बैलेंस्ड करने के लिए ये होगा कि प्रॉफिट्स को आप री इन्वेस्ट करते हो, लाइक इक्विटी को बैलेंस करने वाली बात कर रही हूँ ना.
देखें, जो
तो
अगर आप इक्विटी को री इन्वेस्ट कर रही हैं तो जाहिर बात है कि यू आर रिड्यूसिंग द नीड फॉर एक्सटर्नल कैपिटल, व्हिच मींस दैट यू आर रिड्यूसिंग द नीड फॉर फर्दर डाइल्यूशन, right? So again the question becomes, the balance becomes कि आपने, especially if you really believe in your business and you believe in your ability to deliver on this business, then you want to, especially in the earlier years, minimize the amount of external capital, external dilution that you will find, that you will have to do, right? So the reinvestment is essentially a way of you retaining more control over the equity. That's certainly a way to look at it. But at the same time, the other question is कि अगर आप reinvest नहीं कर रहे तो external वाले कहेंगे कि आप अपने ऊपर इतना believe ही नहीं करते कि आप reinvest करो, तो हम क्यों आपको पैसे दें?
means it's a good option at initial stage that you're supposed to reinvest to get the equity as well, or balance the equity, or maybe to prove yourself that you, like, the business plan is a good plan to execute in future.
असल में हर चीज, as in real life, everything there's hardly ever a black or white entirely, right? There's always shades of gray. Same thing here. आप मुझसे अगर पूछोगे कि जी अच्छा मैं रीइन्वेस्ट कर रही हूँ तो क्यों कर रही हूँ, तो उसके मल्टीपल वजह होंगी. अच्छा, sometimes they will, at some point it may make sense for you to stop reinvesting and actually look for external capital. It's possible. It's also possible that depending on the nature of your business, if it's a services business, then investors will probably be more keen on some sort of cash payout more than when you're a product company. Product company, when I think they're much more interested in you just growing the business and then doing some sort of a sale of the business. Now, that can happen with the services business as well, of course, and ideally that's what an investor will look for, some sort of exit, as they call it. लेकिन अगर फर्ज करो कि आपके पास अच्छी ऑप्शन है, आपको नजर आ रहा है कि there's good opportunities to grow the business, but you can also give out dividends, for example, then that's a way to attract investors as well. There's a whole range of kind of investors. Some will look for capital gains, some will look for some sort of cash flows from your business as well. So it also depends on what the cash flow profile of your business is to really answer that question properly. But in principle, reinvestment is an expectation, because if you're not reinvesting, it gives out the signal you don't believe in your business and you just need to go and dilute yourself more and more. कोई और सवाल?
ये जो नंबर्स लिखे हुए हैं इसके, हाउ डू दे मैप टू अ सर्विसेज बिजनेस?
यार ये numbers to be honest उसने मेरे बड़े generic से डले हुए हैं. ये they're not, they're broad guidelines. For services business they can do extremely similar as well. Let me just look at Accenture, right? Accenture is a services business. It's pretty much following this kind of billions of dollars of valuation, right? So depend करता है. I mean, you can be as a services company, you can grow really large. I think, in fact, जो India की outsourcing firms हैं, they're huge, and they would fall into this category, right? But this is more of a broad indication. कि आप, for example, you don't necessarily have to be at $4 million valuation and $2 million to go for Series A. You don't necessarily.
अरे दूसरा सवाल ये है कि ये जो इसके अंदर फ्रेंड्स एंड फैमिली है ना, स्टेज के आप खुद शुरू हुए, फिर आपने एक को फाउंडर डाल लिया, फिर आपने फ्रेंड्स एंड फैमिली शुरू कर दी. अभी फ्रेंड्स एंड फैमिली तो पाकिस्तान में नहीं होती, तो फॉर प्रैक्टिकली फॉर दिस कोहॉर्ट, लाइक what are the alternate
Yeah,
options on
friends
that?
and family, to be honest, friends and family, as much as the source of funding is concerned, it is also a big signal. Friends and family का मकसद ये है कि जो people who know you best arguably should be the easiest for you to convince. If they've invested, then that's a pretty big, strong signal. Now, maybe they don't have an enormous amount of money, so you've taken small chunks. Maybe it's tens of thousands of dollars, or maybe $10,000, whatever. बात ये है कि जब आप जाके कहते हो ना कि मेरे पास कोई भी पहला इन्वेस्टर मेरे इर्द गिर्द नहीं था, and I do understand that can be a genuine situation as well. But आप जाके कहते हो कि मेरे इर्द गिर्द कोई भी बंदा नहीं था जो कि पैसे डाल सकता था, लेकिन आप मेरे पे पैसे डाल दे. So there is this very natural apprehension that you will build कि यार मेरे पास बंदा आया है थर्ड पार्टी के पास, ना मुझे जानता है ना कुछ है, even if I'm an institution. और जो इसको जानते हैं, अगर वो इसके ऊपर नहीं इन्वेस्ट करने के लिए तैयार, तो should I really be taking that risk? It's not going to be a game breaker for sure, but it is a question that naturally will get asked. सिग्नलिंग है ना, असल में बात ये, फॉर एग्जांपल कई केसेस में लोग वीसी के पास इसलिए जाना चाहते हैं कि सिर्फ इसलिए नहीं कि उनको पैसों की जरूरत होती है, उनको इसलिए जाना चाहते हैं कि वो एक बड़ा स्ट्रॉन्ग सिग्नल देती है. लाइक आई नो इन फॉर सम एंटरप्रेन्योर्स गेटिंग अ गुड वीसी टू इन्वेस्ट हैज so much value for them. I'll give you an example. There's a very large family of large business family in Pakistan जिन्होंने कोई एक startup शुरू किया हुआ था. And I met the management team of that startup, and they were saying कि वो हमें कह रहे हैं कि आप जाके VC से पैसे उठाएं. I was like, उनके पास इतने पैसे हैं, अगर ये business अच्छा है, तो खुद क्यों नहीं डालते पैसे उसमें? पहला तो सवाल इसलिए आएगा क्योंकि VC भी सवाल पूछेगा कि भाई इतनी अच्छी अपॉर्चुनिटी है, तो मेरे से पैसे क्यों लेने आए हो? तुम्हारे पास तो पड़े भी हुए हैं. लेकिन उनके केस में मैनेजमेंट ने जिक्र किया था कि दे आर वेरी कीन ऑन दिस होल आइडिया ऑफ बीइंग एबल टू से आई गॉट XYZ VC टू इन्वेस्ट इन माय कंपनी, बिकॉज देयर वाज दैट लेबल लग जाएगा, उसके बाद ब्रैगिंग राइट्स आ जाएंगे. सो नॉट ऑलवेज एवरीथिंग इज ड्रिवन बाय एंटायरली रैशनल reasons. लेकिन you can see why, for example, a VC would want to see some level of confidence by people around the entrepreneur to kind of give them confidence of betting on that individual. Anything else?
Yes. Sorry, I was on mute. पाकिस्तान में जनरली फंड रेजिंग गंदी बात समझी जाती है, किसी से पैसे लेना या इवन बड़े बूढ़े ये भी कहते हैं कि पार्टनर ज्यादा ना डाल लो तो बड़ी प्रॉब्लम हो जाती है, तो ये वो इट्स वेरी लाइक द वे इट इज इन द सॉर्ट ऑफ मॉडर्न वर्ल्ड, जहाँ ये कैपिटल के स्टेज के ऊपर एक स्टार्टअप सीरियसली इस बारे में सोचे कि यार मुझे अब कुछ
भाई आवाज बड़ी
फंडरेजिंग
खराब
कर
हो रही है
लेनी चाहिए, बिकॉज यहाँ तो हद तो ले कर जाऊंगा, किसी पैसे नहीं।
यार। पहली बात तो वैसे
सॉरी, वेयर डिड आई
पहले
टेक ऑफ?
अच्छा, उसमें पहली बात तो ये है कि you can argue that you'll find people even in the West who still follow that mentality. उसमें कोई शक नहीं है. Yes, as a generally speaking, as a society, the West is far more willing to um, accept investments and dilution as a broadly speaking, compared to Pakistan. That is very true. But at the same time, individuals आपको हर जगह ही मिल जाएंगे जो इस तरह की सोच वाले होंगे. That being said, I think what the entrepreneur should do is two things. One, sit down, think about कि अगर मैं आज के दिन capital raise कर लेता हूँ, तो where will I take this business? And can I take this business without that capital injection? That's the first. That is probably what will convince the entrepreneur to either go down this route or not go down this route, right? I mean, I started off the presentation because a few more people here now. I just started off with this statistic that according to the US Chamber of Commerce, 82% of the small businesses fail due to cash flow mismanagement, right? And that probably means for sure not having cash in some cases, right? So what that means is कि अगर आप पहला ये decision लेते हो कि मैं, if somebody gives me money, I can take the business up to, for example, 10 crore की revenue. And then if you say कि अच्छा अगर पैसे नहीं लेते तो कितने रुपए ले जाओगे? Maybe the answer is 1 crore. So then the question becomes कि then the first point of discussion is that there is reason to at least consider taking money because there's a huge opportunity that you're just skipping out if you don't take money, right? So then the question becomes, okay, fine. If the opportunity is good enough, I should be willing to look at taking money. Next question is, okay, who's going to give me the money? And what will be the terms of it? It's possible कि some terms, और पाकिस्तान में ये प्रॉब्लम है अभी के जो पैसे दे रहे हैं, स्पेशली जो सेठ साहब वगैरह हैं जो कि कोशिश कर रहे हैं कुछ कुछ घुसने की. I've heard these stories where कुछ सेठ साहिबान जो है वो कोशिश कर रहे हैं स्टार्टअप्स में इन्वेस्ट करने की, but they have this mentality के मैंने पैसे डाले हैं तो फिर तो 75% तो कंपनी मेरी होनी चाहिए ना. उसकी वजह ये कि तुमने तो सिर्फ आइडिया ही लेके आए थे. I mean, that won't work. So you need the VC-ish kind of mentality, whether it's from an individual, an angel, or from an institution. But nonetheless, that's where you go. And also, you agree on what happens when you give that money. अगर first करोगे उसको आपको पैसे दिए हैं, उसको आपको उसने पैसे दिए हैं, and it's very clear कि ठीक है भाई, there will be some sort of governance structure in place. वो board बन जाएगा, कुछ होगा. But tomorrow, if the business fails, it's not like he's going to come to your house and say कि पैसे निकाल. Right? So there's all these things that come into play, and especially more so in a society like Pakistan, जहाँ पे कि अभी ये इतनी prevalent नहीं है this idea. But in the end, unless the entrepreneur is seeing some personal reason and benefit, uh, he'll never do it, right? And to really figure out whether this is useful, the entrepreneur needs to sit down, map out that if I get money from external sources, what's going to happen? What is my business going to look like? And if I don't get that money, what is it going to look like? And I think that's the most important and strongest motivation to look for money if you can see a good enough growth opportunity.
Okay, makes sense. Okay.
All right. In case any of you guys have any more questions, we're obviously on the same WhatsApp groups and stuff, so feel free to reach out.
So sorry, I joined a little bit late. Have we covered everything, like in terms of the options of funding and all that?
He went through the slides, the presentation he made. So it covered a little bit of everything, the basic intro.
अच्छा, आपने ना वो किसी मेरे ख्याल ऐसे ईमेल ग्रुप पे भेजा है कि जहाँ सबको मिला नहीं, तो काफी सारे लोग काफी लेट ज्वाइन किए हैं.
I asked you for, मैंने कल confirm किया था आपसे email. It was the same as you said.
Yeah, no, people like Ahmad are saying कि वो नहीं मिला उनको, और मैंने कहा था T2 वाले ग्रुप शेयर कर दें WhatsApp वाले पे. ये काफी सारे लोग तो उधर से आए हैं. खैर, anyways, I guess you've recorded it, so if you can just publish it, तो
Yes.
जिन्होंने मिस किया है वो उसको
Yeah,
या भी
sure.
अटेंड कर लेंगे. Has Asjad dropped off?
Yes, yes.
Okay. All right. Thank you.
Thank you.
Fizz.